Short form video from the Market Sniper. Like and share now, please. We appreciate it. It's currency for us. This is the USDJPY. This was the primary trade from our traditional market session on our live trading day on Friday. That's right. You could have participated for $197 in that event and also got the crypto session thereafter. Our primary trade was the USDJPY. I told you I liked it. I'd been accumulating longs during this period over here. Now, a component to this is that this was part of a much bigger macro trade that this purple line was the primary target for. Progress decay, the event where you fail to go significantly further up and have substantial pullbacks and time delay, time decay and progress decay. Most of the time you are sub the 136.216 level in terms of the price. There's just two tiny icebergs period where you were above, over there, and over there. You can argue maybe a scratch of one over there as well. Most of the time you're below. This is typical of a progress decay period post a macro target that was run on the USD JPY. So this particular setup points to a much smaller time frame, and generally the patterns get smaller as you work your way deeper into a possible trend that is offering 138.24 as an eventual target. So we were already accumulating longs during here because of the HVF structure that had come. We knew non-farm payroll. This was the non-farm payroll release that happened at 1:30. So it's an hourly chart. So that is 1 o'clock. It's showing you at the bottom there, the black box at the bottom. Halfway through that hour, you triggered this event. That's the non-farm payroll candle. We were already long from earlier in the community in and around these levels over here. But a couple of attendees asked after a bit when it had come back down, hey, it's USDJPY has come back down and it's actually cheaper than your just-in-time entry, the green line. So should I be getting it? And our answer is yes. Post a triggering event, our default assumption is success to target. So the fact that you had that momentum to trigger, doesn't matter that there's a fundamental reason that you take it as a triggering event and you continue with the trade. So that was round about there. By the way, you could have got in at that level over there. But as the question was raised, as and when we were at the 136 level, we took that as the entry and we said, yes, for us, that would be a potential entry on a non-advisory basis. Further, instead of having your stop all the way down where we traditionally have it, for someone who is now getting in later, post a triggering event and pullback, we suggested optimization to just under the non-farm candle, and in fact our axis, our midpoint is there, so just under the axis as well, in and around the 135.772 to your 136.2 entry. You will also note that we ran the second interim. Our method is literally the only method that tells you when you're likely to get a little bit of adverse pushback against your overall move. Note how nicely you broke on the Sunday session through into Monday to the second interim, and now you get a bit of a rest. That is the key level. What happening? Recoiling up, market assessing these new numbers that it's having to get to live with. Now it's past the 137 mark, a key round number, the 137 level, just about there. So a little bit above, a little bit below, a little bit above. Are we ready to take this new level and a smaller version potentially of a mini consolidation before possibly going higher? Now, our assumption is success, but that doesn't mean you have an underwritten guarantee of any form. This is a probability-based game, and you are looking for a 6.54 risk reward. The key benefits of HVF method is a break fast and furious away from your entry to give you emotional comfort, and a tight stop to an expansive risk reward in an asymmetric beneficial situation. And the market offers lots of these generally. So as a result, $1,000 on this trade could deliver 6,541. That would mean a $1,000 loss were the market to have run down and taken this level over here. Nothing has been achieved yet, only about 40% of the profit, approximately, with about, well, call it 55, maybe 60 still to go. We will see how this goes in further view. Remember, themarketsniper.com, you can trade and apply HVF method across all time frames, including the 1 hour time frames. And I've just given you one example for free in retrospect of a short time frame trade manufacture for a triggering event setup and a risk reward creation of 6.54 to the expectant target. Hope that was useful and interesting. We value the currency of shares. It takes time and effort and recording equipment to do these videos. If you are getting value from them, a share and a like is greatly appreciated to help us get more traction on YouTube. Thanks so much, and we look forward to updating you on the outcome here further and later. Bye for now.